All right, so let's talk about getting rich in 2026. Obviously, this evening, folks, I'm stepping in for the one and only Dion from Dion Talk Financial Freedom. He is on his way to Thailand and couldn't make his normal live stream, so I said I would jump in. Matt, the lumberjack landlord, will be joining us in about an hour. He got his time zones messed up this evening. Usually is on East Coast, and he's got some family activities in Central. So Matt will hopefully be joining us in about an hour. But I thought I would right away just open it up for Q&A questions. I know we've got a couple of people already on. Thank you for being here, Wayne, and anyone else is there. Love to get questions. We could talk real estate, economy, anything, health journey. I'm an open book here for you this evening. I would love to get any and all questions. Also, if you didn't hear, we did hit that 500 mark inside school this morning, and I will be adding the Get Your Money Right course in there, hopefully this weekend. And just wanted to thank you all. And of course, we've got our 4 p.m. session tomorrow, just me, Jason, and Ty, really talking real estate, what you should do in this economy, this real estate market. So hopefully, if you're in school, you can make it tomorrow as well, 4 o'clock. So thank you all for being here. Jason, Jay, Chris, Bill, all of those folks. Thank you, Chris, for the congratulations. Yeah, on the way to 1K. That'd be crazy, but that'd be a lot of fun. It just means we're helping a lot of people. The thing I like about the One Rental at a Time community, all of you, the whole millionaire series is we're just everyday people, right? And maybe we've been doing it for a couple of decades, but all of our stories are different. I think that's the beauty of becoming a millionaire or a multimillionaire, is you realize that everybody can do it, and that everybody's journey is different. Often starts with struggle and sacrifice. I always talk about the first 5 years sucking. But once you kind of get that proof of concept and you really start making moves and you start seeing a difference, it's a lot of fun. Something I was asked the other day in another podcast, I thought I would start. Again, folks, feel free to drop in your questions. I can see the comments coming in. So again, you could put questions there. This session is 100% for you. So again, you can put your questions in. I'll hopefully get to all of them. Again, Matt the Lumberjack will be here in about an hour. So let me give you the question I was asked. So this individual happens to know me pretty well, and he says, "Hey, you're looking great, right? You're looking good. How much weight did you lose? All of that." And I told him about the health journey, right? The fact that I started the year at 34.8% body fat. And the last scale reading, it's not a DEXA scan. I'll do a DEXA scan at the end of December. Had me at below 11% on the Zoom body pod or whatever they call that scale. 10.8, I think, this morning. And so they asked me, what was easier, getting wealthy or getting healthy? And my gut reaction to that question was getting wealthy was easier. And the reason I thought that was, when I think about the wealth formula, right? Sacrifice, live below your means, become elite, do it for a decade. You only have to make a couple of moves, and then time is your friend. However, getting healthy is a daily battle. Certainly, as your body fat falls, it becomes a real struggle, right? I think I was at 12% body fat, again, on the scale, not a DEXA scan, probably 6 weeks ago, maybe 8 weeks ago. And, getting from 12 to 10.8 has been a struggle, really, daily decisions, extra steps, and all of that. But I think that does a disservice to getting wealthy, because I think getting wealthy is the same thing. I think you have daily decisions, right? You can choose to, splurge. You can choose these things. So what I like to say now when I get a question like that is getting healthy is fast. I think you can make monumental changes in your health in 6 months. I did it. I know it's possible. let alone a year, right? And I would strongly suggest, right? Lots of people watching this. First off, lots of people in our community have lost weight. People are sending me notes. Hey, Mike, I saw what you're doing. I lost 10 pounds. I lost 20 pounds. Congratulations. That's huge, right? You lose 20 pounds, you're buying new clothes, right? So again, congratulations. But what I would tell you is if you're listening to this and you're out of shape, do me a favor. Don't wait for January 1st, right? Don't wait for January 1st to be the magic date. Start today, start tomorrow. There's no reason you need to wait. There's nothing magic about January 1st. Health is wealth, right? You know, you can look through life and you have all of these challenges. But as soon as your health goes, you only have one problem. And I don't want that for you. I want you to be around long enough to enjoy the wealth that we're building together. And some of you need to lose some weight. Some of you need to build some muscle. Some of you just need to stay in the battle longer. So if you're out there and you feel like I'm talking to you, I probably am. And, you know, take on a challenge. Try to lose 10 pounds. It's remarkably easy, right? You start tracking what you're eating, look at some macros, add an extra 2,000 or 3,000 steps to your day. That's really all I did for the first 3 months of getting healthy is I just walked 15 to 18,000 steps. I didn't really change anything else. And I dropped like 15 or 20 pounds. Then I started doing weights and other things. So again, if I'm talking to you, I am. Don't wait for January 1st. Start tomorrow, which is November 19th. And if you're coming to my event, tell me how you did. Tell me how much you lost. We'll take a picture. And I want you to be around for your family. I hear all these people. I do it for my family. Okay, great. Would you be healthy for your family? Would you lift weights for your family? Right? Sure, you say you would die for your family, but that's not the goal. You're not supposed to die of a heart attack at 52. There's no glory in that. Try to get healthy and make it to 82, right? Again, whenever I get that question or similar questions, what's easier? They're both hard because it takes focus and daily discipline. But again, you can get healthy in 6 months. I've seen it. I've done it. Getting wealthy takes time, right? It takes a decade. All right. So I've been riffing long enough. Let me scroll up to these comments. I did see some questions come in. I think the first question is from No Bean. Have you ever remodeled while tenants have been in the unit? If so, did you adjust rent while construction was going on? So I wouldn't say remodel. I have done things like replace carpets, which is interesting. No, I did not change rent at all. They got new carpet as the deal, right? So they helped us move furniture. We've had issues break, like we've had a subfloor give out in a bathroom. Thankfully, in that house there was a second bathroom, so you know they were without a second bathroom for a weekend, I think. No, if I'm going to do a heavy remodel, it's always vacant. Yeah, it's always vacant. If we had, like, there was one time where we had a leak on an upstairs unit that impacted the bottom unit, and we did put the bottom unit in a hotel for a few days as we cleaned up the mess and make sure we fixed the leak so it wouldn't continue. But no, I cannot recall a situation where I adjusted rent for a remodel. Not to say I wouldn't, right? Because that is an inconvenience. But I've never had that situation. But it's certainly one that could happen. All right. Tiger's got a question. In an environment of fear like the one we are in now, what is your advice to new investors? What should we pay attention to and what should we avoid? The good news is what we do here or what I coach, preach, teach never changes. I'm not here, nor will I ever tell anybody to buy anything. I believe your job, number one, especially as a new investor, is not to buy. Your job is to learn the skill. Now, if you're a real estate guy or a girl, the skill I'm referring to is you have to understand what an average deal is in your buy box. So get a buy box, look at it every day for 3 to 6 months, articulate what an average deal is, and then and only then, again, then and only then, do you write offers on good or great deals. That when you've done the work and you've been disciplined, like I teach and talk about, fear goes out the window because you've done the reps, right? If you haven't done the reps, everything is fear. The boogeyman is around every corner. But when you've looked at your buy box every day for 120 days in a row, which I've done for years, fear goes out the window because you can articulate, hey, in my buy box, an average deal is 6.5% yield. I'm writing a deal that's going to be 9.5. Fear goes out the window. So what I would tell you, Tiger, or anyone asking about today's environment in fear and liquidity and the Fed and Trump tariffs and all of this noise, is simply do the work. Simply become a domain expert on your buy box, and nothing else matters. All this other outside noise goes out the window. Why do I buy deals? Because they're great deals. Why do I buy great deals? Because I've done the work and I know what average is. So, that's my answer. And doing the work removes fear. It just does. Because you have evidence. You have done the fundamental blocking and tackling that let's be clear, almost nobody does. Right? I've been talking about a buy box for 8 years. Certainly 7 years. And I don't know, 2% of the people get it and do the work. Most people want to gamble. Most people want to be played with by the media and get their heartstrings and emotions all aflutter. But if you do the work, that all goes out the window. You just know. So short answer, Tiger, is do the work. Alex, now that Dion isn't here, we can talk about freeing trapped equity. Yeah, absolutely. One of the things that I did, and I've told a lot of people, is I think investors are either in growth mode or chill mode. And if you're in chill mode, like Dion is, yeah, you don't have to tap equity. Your snowball, his snowball is so big now that it produces enough cash to buy a new house or a new property every year. Good for him. I hope you all have that opportunity someday. But for guys like me, when I was coming up, I had to keep moving equity around. I believe inflation is a feature, not a bug. I believe that if you've done the work and you buy great deals and the tenants pay for the mortgage payment and some, that your job is to build the biggest foundation so that inflation lifts you the highest. Now, safely, no arms, no negative cash flow, no alligators, all the usual caveats that I talk about. But yeah, I have no problem taking equity. If you are in growth mode, and now let's be clear, what's growth mode to me? Right? I would never, if I ever had equity in a house that was below 70%, I would tap the equity. Now I'm in chill mode and I don't do that anymore, but I could, but I don't. I think a lot of us could do bigger and better things, assuming we leverage equity safely, right? Don't buy negative cash flow. Don't create negative cash flow. Look at my book, One Rental at a Time, for my mistake, right? That Norris Drive property turned it into an alligator because I took out too much cash. So there are caveats to do it safely, but I'm all for it. If that's where you are in growth mode, go nuts. But if you are in chill mode, that's okay too, right? Just know thyself, know where you are, and yeah, that's my thoughts on that. Trapped equity is definitely a tool I used a lot. Yeah. All right. What other questions do we got? What are your thoughts on flipping to build active income and then using some of that income to start turning some flips into rentals, using hard money for flips and refi to DSCR with turning into rentals? I think that's a great strategy. That strategy obviously works well if this is your business, right? If you're a quote unquote flipper. I'm not sure it works as well for a full-time employee because flips are so difficult, and so there's so many ways to get got doing a flip. But yeah, if you're a business person, like tomorrow we get Jason Pritchard and Ty, that's what they do, right? They're building what I call chunk money with flips or wholesales, maybe some sales using their brokerage, and then they're adding rentals now and again. let's be clear. Real estate can produce income or wealth. And flipping and wholesaling is income. It can be wild. I know people who make 7 figures. I know 1 or 2 people that make multiple 7 figures flipping, but it's still income. It's still active income. You should absolutely. I mean, if it was your business, I would probably do. I mean, if you could get away with for every 3 flips, keep one. So every 4 transactions, you add a rental. I think that would be outstanding. And what would happen in a decade is you would be rich enough where you don't have to flip anymore, right? You could slow down. You could take a summer off if you wanted. So I mean, I've every flipper I ever meet, I'm like, how many rentals do you own? How many rentals? And most of them say none, which is a huge mistake because you're just burning the candle at both ends. And I've seen how that ends for folks. So I strongly suggest if you have a way to generate lots of active income with flips, that you find a way to keep some. And I would just set a target, 1 out of 4, 1 out of 5, something like that. So new gen REI, I strongly suggest doing that. All right, Jason's getting back on the wagon. I like it. Let's get healthy. Why did you cancel your Buying Vegas episodes? You were supposed to buy and show the process. A couple of reasons. First and foremost, it was wildly expensive. Having a videographer follow you around was wildly expensive. Second, I was having to get multiple people coordinated, right? At the time, Lisa Sutton, JD, all these other folks together, and it was a scheduling nightmare. And I stopped having fun, frankly. It started to feel like work, and I don't want to work. So, I spent $1,000 per episode, $1,000 per episode to get that produced. And after spending $6,000 and realizing that I was having no fun and it was a complete headache and disaster and stressful. And it wasn't because looking at real estate wasn't fun. It was because I was suddenly becoming a calendar jockey and having to do all these things that I was like, nope, my life's too good. I'm out of here. Not doing it. Nope. So that's why Buying Vegas didn't go anywhere past 6 episodes, because I was having no fun and it cost a lot of money. What do you recommend doing when a vacant unit suddenly becomes hard to rent? The property is in good condition, but we're receiving a lot of applicants who don't qualify. So the good news is you're getting applicants. It would be a different story if you weren't getting applicants. Again, I don't know anything other than the question is there. I got more questions. The unit's been vacant for 4 months, and I'm worried it might stay vacant until the next. So I would never let a property go vacant for 4 months. If I had a property that was vacant for 4 weeks, I would take emergency action. So what does an emergency action mean to me? You could slash the rent. You could cut the deposit in half. You could offer, if you sign a lease, get 13 months, so you give them 1 month free on the back end. You could do a lot of things like that. Also, one of the things that I've seen on properties, that specifically houses that are not getting the type of rent or the type of applications that I like, is typically the front yard is not up to par. And you got to remember, when you're advertising a unit, they're going to drive by it first. And if it looks like crap, they're going to assume the insides look crap. I've known plenty of people who have done the nice upgrades and this and that and stainless steel and blah, 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 but the outside looks like crap. So clean up the yard, trim the bushes, maybe just a fresh coat of paint on the door. I mean, just putting fresh coat of paint on the door can make a difference. But at the end of the day, if I had a property vacant for 4 months, I would just lower the rent at this point, but I would keep my credit standards. That's the key. Never sacrifice. I'd rather have a vacant unit than a bad tenant. So I don't know what you're asking, Basilio, for rent, but I would lower it $100, but keep the credit quality. Eventually, you're going to find somebody who wants a deal that meets your criteria. And again, you've already lost 4 months rent. So, $100 off you could have made that up earlier. So don't let a property sit that long, guys. Again, if you have a property that's been vacant for 4 weeks, get aggressive. I don't recall having a unit vacant for longer than 4 weeks in a long time. It was pretty bad in 06. 2006 was rough, but this is not 2006. So, Basilio, I would cut rent immediately. I might even lower the deposit requirements immediately. However, keep the credit quality, because again, you're already getting applicants. Now you just got to find the right one that meets your criteria. So that's what I would be doing, especially as winter comes up. Do you see a max for age to buy? Should 65, 70, 75-year-old buy because you don't have 10 years for everything to grow? That's a good question, Bill. So I guess I have a couple of thoughts on that. One, let's be clear. I've talked to a couple people, unfortunately, over the last couple of decades who got life-changing, life-altering news and of the negative kind. This or that ailment. Hey, Mike, I've got 18 months to live, 24 months. It's very hard conversations. And if you unfortunately get one of those, taps on the shoulder, go enjoy what you've got left. Real estate's not your play. Don't worry about it for a second. Go enjoy the time you have left. That said, though, if you're healthy at 65 or 70 and given current medicine, who's to say you're not going to be 90? The other thing I think about, a lot of folks that are 65 and 70, they're not really buying investments for themselves. They're buying investments for the next generation. Right? They know Father Time's undefeated. So their purpose for buying might be, I'm going to give this asset to my son, my daughter, my grandchild. So again, the question would be for somebody who's 70-year-old looking at this is like, what are you trying to do? Are you trying to just simply build wealth and cash flow for yourself? Probably late in the game. But if you're like, hey, I want to buy one house for my 4 grandchildren, that's a great goal, right? I never judge anybody for their choices, right? If you're comfortable with your choices, my opinion, your opinion shouldn't matter, right? So again, you're 78 years old, and you're getting into this now because you're a little bit bored, and you got 4 grandkids, and you know what? You're going to try to buy one property each in the next 5 years. That's great. Put it in the will. Grandchild A, B, C, D. I think there's a lot of things that could do well. So hopefully, Bill, that answers your question. If not, feel free to ask some more. I'm here for you. Hey, Shane, what is your take on purchasing with tenants in place and right criteria form that decision? So I have done it. I don't like to do it. I would much prefer vacant properties. I will delay closings if we agreed that it would be vacant when I closed. Right. However, I've bought plenty of properties with tenants in place, and I just get a monster discount because I assume just that the tenant's going to be a problem, and the landlord is selling for some reason. Right? Sellers are liars. Oh yeah, this tenant paid on time forever and never missed a payment. Well, shocking. They missed a payment as soon as I got it. So if I'm going to buy a property with a tenant in place for whatever reason, I am getting a monster discount, assuming I'm going to have an eviction and I'm going to have a remodel. So I just priced that in. I bought a property, I think 3 years ago, with tenants in place during the pandemic. I budgeted like 10 or 12 grand for the eviction because this is right during the eviction moratorium. They ended up being there for 4 months, never paid rent, even though the last landlord said they never missed. Shocking. I know. They lied. But yeah, I just make sure I get a discount or I don't do the deal. Yep. I have Basilio again. I have the unit listed on Section 8 as well to see if we can expand our options and find hopefully a good applicant. Yeah, I mean, definitely list on Section 8. All of my units are available for the Housing Authority. Definitely a good call. Yes, Chris talks about it. Daily buybacks work same as daily fitness. Amen to that. 25 minutes a day. Love it. I think a DSCR at less than 50%. That must be a response to something else. I don't remember that question. What moment or issue made you want to quit real estate? What did you learn from it? I think I told this story in my first book, One Rental at a Time. Again, for the folks that don't know, I built up a big stack in the stock market. I turned $7,000 into almost 200 grand, and then I lost 80%. So I come to real estate after losing 80% of my wealth and feeling very depressed and like a moron. Then after a year of learning and changing markets, I finally buy Norris Drive. Norris Drive goes as good as could be expected. Quick cleanup, quick lease, tenant moves in, family moves in. Unfortunately, they never pay rent, and I have to evict them. And this is the first property we bought, and I'm already feeling desperate and like a failure. And then we go into the unit after the tenant is out, and I see wine bottles in the drywall, like a dozen wine bottles in the drywall. The guy turned into an alcoholic and a drunk after his wife left and divorced him. And I remember thinking, oh my God, I lost money again. I felt like a complete failure. And I was ready to give up. I was ready to give up on that first house. And thankfully, Olivia, my better half, said, did we do anything wrong? And the answer was no, we didn't do anything wrong. Credit check, reference check, income check, everything was on point. There's just no box on the application for, are you getting divorced, right? Is the wife going to disappear and the husband going to become an alcoholic? There was no checkbox for that on the rental application. So we just got unlucky. So Olivia said, let's try it again. And again, I got to tell you, I was ready to give up. If Olivia would have paused, I would have sold the house as is and lost money. I was that ready to go. And thankfully, Olivia said, let's try one more time. And, the rest is history. The next tenant moved in and never missed rent. And we sold the property and made 150 grand. And we used that money to buy an apartment building that we still own. And it's a great story now. But to your question, I was ready to give up. And again, the first 5 years suck. The first 5 years, you just don't know what you don't know. You think you know, and then you make a mistake. Tenants lie to you, contractors lie to you, I fired the first 5 property managers. I'm sitting here now 25 years in, can handle almost anything, but a lot of that was because the first 5 years sucked. I had stuff break. I had people steal stuff. I put in a new AC and somebody stole the AC, and somebody broke into a house and stole the copper wiring one time, and it's just all kinds of crazy stuff can happen in this game. So, that's why I'm happy now we have this school community that I talk about so much, because we all have these stories. We have 500 people getting wealthy together, going the same direction. And sometimes it's just good to know that you're not alone. If you're in the first 5 years of suck, there could be no better community for you than our school community. And I mean that without any braggadocious or anything. It's $20 a day. Or $20 a month. Sorry, $20 a day. That'd be crazy. It's 67 pennies a day. And part of that just gets you access to other people doing the same thing. And if you're in the suck right now, join the community and realize you're not alone. That would be my recommendation. Hopefully that answered your question. Done. I don't know how to say that. Okay, next. Question. From the buy box near where I live 4 months and nothing comes close to positive cash flow. How would I go about picking another from the areas around without doing it randomly? So what I did, again, I spent a year. So you spent 4 months. So you're smarter than me. I spent a year looking in the Silicon Valley. Nothing worked. And then we just kept talking to people, and somebody said Fresno, California, which I've never lived in, never been to at the time, didn't know anybody. So what I did is I went down to Fresno probably 4 or 5 times, and I talked to as many people as I could. And I asked all of them, where would you invest? 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 And everybody's answer was different. But when I collected all of the data, this area of town called the Mayfair District, 93703, came up the most. And again, I didn't know any different. So that became my buy box after wasting a year in, close to me. So again, the last thing I would say is try to find an area that you can either drive to yourself or you have family friends that are there. This is the problem with out of state investing, in my opinion, is a lot of people do out of state investing, but they don't have trusted boots on the ground. So they're paying people to tell them stuff and they don't want to tell you the truth, or they want to tell you the prettiest version of the truth. And that's how you get in trouble with out of state investing, is you don't have trusted boots on the ground. So that's what I would do. Hopefully that helps. Zaps spiders. That's creative. Oh, LTV on a paid off house. Thanks, Alex. That makes sense. I will say this for Dion. Every time the like button gets ring, an angel gets its wings. Yes. I love that. Kata, how do you handle tenants that place excessive maintenance requests? We recently acquired our first home, and the tenant has already placed 3 requests on Him Lane with less than 1 month in the house. Well, it depends on what the requests are first. So it says one of the requests with furnace smells. The house is newly built. So sometimes, again, I don't know these tenants at all, but sometimes sometimes they're first time tenants themselves and they don't really know what is and isn't reasonable. The good thing about Him Lane is usually there's these Q&A or things that can do self-diagnosis. I would go have a conversation with them and see what's really going on, right? I would go see them or have your property manager go see them and see what's really going on. And again, I don't really worry about excessive maintenance requests. I would care about stupid requests like light bulbs and things like that. But a furnace smelling, I mean, I can understand why you'd want to be concerned about that, because something could be burning, something could have gotten in there. Certainly, if you went there and it smelled bad, I think that's a reasonable request. But yeah, I would. And sometimes just being new can have that new smell. It's just working through its stuff. But yeah, I think somebody needs to go talk to the tenant and see what they're thinking. I would bring the requests with you and just say, hey, what can we do here, right? Anything else, so they don't just seem like one-offs. I would, when in doubt, have a conversation. Treat them with respect. They are the client, right? That's how I suggest people treat them. They're the client, and I just think it's time for a conversation. That's what I would do. Hey, Nicole, how are you? Good evening. Any thoughts on utilizing combination of notes and single-family rentals for financial freedom income replacement? I think that's a great idea. I think I've heard Dion say this, and I actually have a note. So actually, I don't think I've ever talked about this. So I owned a building in Fresno called the Hub for a while. It was a commercial building. It was an office building. It's when I thought that I was going to buy a house in Fresno, and Fresno would be my second home. So I got a deal on a vacant office building. I bought it, tricked it out, and I was operating it as basically a real estate office and education space for a long time, like 4 years. And ultimately, when we bought this place that I'm in now in Vegas, I realized that Fresno was not going to be my second home, that Vegas is my home now. So I sold that building and I put it on a note. I sold it to a friend of mine and gave him great terms and fixed interest rate, interest only, for 5 years. So I think selling your assets on seller carry or owner carry or notes, as we're saying here, is a great idea. Yeah, I have no problem with that. I think it's probably something Olivia and I will absolutely do as we start to unwind the portfolio maybe in a decade. So full support. Quick question. Do you rent to friends and family? The answer is hell no. I will not rent to family and friends, Chris. Never, ever, 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 ever. I don't loan money to family and friends. I might give money to family and friends, but I don't loan money to family and friends. I would, no chance in hell. No chance. No chance. In fact, funny story, my grandmother, who now has passed, She was in a very, very tough spot. What year was this? I want to say it was 2006. It might have been 2005. She was in a very tough spot. Her husband passed. She couldn't afford anything. She was basically going to be homeless or had to move in with one of her daughters. So I bought a place in Sedona, Arizona, and I literally lived there for like 15 years, rent free. So yeah, I have been known to give stuff to family, but I would never rent to family and friends. It's just anytime money gets involved, never, never, ever, 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 ever. I know Dion disagrees with that. Dion, I think, rents to his kids or someone. So yeah, there are definitely different opinions. I would never, ever do it. Not even close. The answer is no. Hell no. I'm going to buy a townhouse to rent while I rent a townhouse. Okay. What would I do differently if you knew deflation was guaranteed? Well, I guess we need to talk, Angel, about what you're referring to, deflation. Are you talking about deflation of the dollar? Are you talking about deflation of the GDP? Are you talking about deflation in home prices? I mean, what are we, Angel, you need to tell me a little bit more about what you mean by deflation, please, so I can get a little more, I can figure out what your question is. So what's deflating, Angel? Let me know below and I'll answer your question. Thanks. How did you keep growing after multiple properties? Is this when you use DSCR loans? I have 3 houses, 2 rentals, and a primary. Bank says my DTI is too high. Yeah, DSCR loans, problem goes away. Seller financing, problem goes away. Yeah, both of those are exactly what I did. DSCR and seller financing. Will 50-year mortgages reduce rental demand if more people will now qualify to buy a house? The 50-year mortgage, in my opinion, is going to be like rent control. Okay, what do I mean by that? Well, rent control, if you studied it like I have, it feels really, really good the first year. Why? Because a lot of people have their rent fixed that first year. But then as life goes on, people grow families, kids move out, all of this. You have a bunch of people stuck in housing that is either too big or too small for them. And, oh, by the way, because of rent control, landlords are not remodeling properties. And look at New York, it's got 50 or 60,000 empty properties because of rent control. So rent control feels good year one, but feels terrible every year thereafter. The 50-year mortgage is going to do the exact same thing. It's going to feel good for about a year as more people qualify. And but then guess what? Pricing will recalibrate to the 50-year. And what does that mean? That means prices go up. So again, if you are lucky enough to own property like me, if you are lucky enough to buy in the first year with a 50-year mortgage, you're going to win. And then everybody after that's going to be complaining because it's just as unaffordable again. So you might get a very, very small window where rental demand is down, but it won't last long, I don't think. Like Dion's book, do you plan to publish more books under the ORAT publishing like Matt and other millionaires? I would, if somebody wants to publish something under the ORAT brand, and I know them or like them and trust them, I'm happy to. And I don't know if people know this, but Dion, I don't make a single penny off of Dion's great work, right? It's not like I got $1 or something because he's used the ORAT branding. It's just a give. I signed a contract saying such and given him full permission. But yeah, if Matt or Millennial Mike or Anna Kelly wanted to write a book and use the brand, absolutely. I think we need to celebrate winners and we need to celebrate stories. And if I can be a little part of that, happy to, love to. Maybe a book from Financial Firefighter. Let's see that one. Missed your morning video, your thoughts on the market, etc. Looks like things are going to get rough for many starting next year. I think the market clearly is in a liquidity crunch. I think that's what's happening underneath the surface. I think that's why you're seeing the Fed stop QT. I think you're seeing Treasury realize that liquidity is drying up. But you also, if you step back and realize that central banks around the country, around the world, excuse me, are getting ready to turn on the money printer. Look at Japan as a latest example. I think it's going to get very interesting next year. I do think we will have plenty of pain to absorb, right? One of the things I've talked about, foreclosures, I've talked about commercial real estate, I've talked about small and medium businesses. There's just a lot of companies and a lot of bad deals that need to be washed out, and it's going to start happening. It needs to happen, right? If you did a bad deal, you're supposed to lose money. It's not supposed to be papered over and hidden and extend and pretend. That's not how the game works. If you do a bad deal, you do a bad deal. And so yeah, we're going to start to see, but for me, that's opportunity, right? I'm on the other side of that equation. I love it when people get freaked out and scared. I have proven during my 25 years, I will zag when everybody else zigs, or zig when others zag. And so yeah, I'm getting more excited, right? I love it when the average person gets afraid and sticks their head in the ground or sells assets at crazy prices because they're scared. That's when I get aggressive. And oh, by the way, I've been stacking cash for this moment. So yeah, I think there's absolutely more pain coming. It frankly has to. It's mathematical. But again, pain equals opportunity if you're ready to deal with it and ready to look for it. So I'm excited by what's coming. Jerome Powell leaves office in the spring. Yep, in May. Likely replaced by a low-rate candidate. Yep. Do you think the housing market is going to boom or stay the same with different Fed mindset? So I think there's a couple of answers there. I think the next Fed chair will absolutely be Chris Waller or Moran or somebody like that who wants to cut and cut big. I think there's no question that Trump's going to nominate somebody like that. Like, why wouldn't he, right? But that doesn't mean it happens, right? There's 12 voting members, and the chair is only one of them. So I think you might be surprised. I mean, look at how divided the Fed is today. I think there's 10 out of the 18 are like no cut. Inflation is a problem. So I don't think the Fed is going to have much impact on rates, even if they do cut. That said, kind of a caveat to your question is, I think the Trump administration, specifically the Trump administration, is going to do everything they can to reinvigorate housing. 50-year mortgage, loan portability, loan assumption, first-time home buyer, this, whatever. Something big is coming because they need to get the real estate engine going. If you want to get us out of a recession or close to a recession, you have to get the real estate game going. So I think there is a very good chance that the Trump administration does demand-oriented stimulation for housing. And we've all know what happens next. Supply and demand is undefeated. And let's see where that goes. Barefoot. Having trouble finding anything that pencils. I need 150 to 160K to cash flow, but sellers are stuck near 200. Thoughts? Written 5 offers so far. Well, the answer is, first, congratulations. You clearly know your numbers. So, I mean, again, I think you're ahead of the game. I think more people should be able to say things like you said, like, hey, I have to get 160 or it doesn't work. In a 200K market, that's awesome. You're ahead of the game. So pat yourself on the back. Now it's just time to do the work. 5 offers is nothing. My record is 100. I wrote 100 offers with an agent named Scott. I've talked about a couple of times before we finally got a deal. The second thing you need to do is you need to follow up. You need to follow up every week or every 10 days on the current offers, because trust me, you will find a motivated seller that will take 160. It's a mathematical certainty. You just don't stop until it happens. The other thing I would do, just given where we are in this time of year, is I would put a clock on it. Like, I can close by the end of the year. you never know. There might be somebody that needs to move by the end of the year, and you're the only game in town. So again, you know your numbers. Congrats. You're ahead of the game. Congrats. Now, do the work. Write 5 offers a day. I'm serious. 5 offers a day. Certainly 5 offers a week. And then follow up on the ones you've already written. Have a spreadsheet and follow up. The sellers have only 3 options. They can sell it to you, sell it to someone else, or take it off the market. Until they do one of those 3 things, keep following up. And again, 5 offers is cute. Write 50, write 100. Keep going. Don't stop. What's your rule for when a property is hold forever asset and an asset to trade up? Oh, that's a good question. I don't think I have a property that's hold forever. No, I think any asset I have has a price that I would sell it at any time. You never know when a stupid offer might come. So I don't look at any asset as hold forever. I certainly have tiers, like Olivia and I've talked plenty of times about, hey, when we start reducing our portfolio, these are the ones we keep and we give to our daughter, that kind of stuff. I think a better question would be, when do you hold an asset? So I guess the angel to your question, I look at all my assets the same. They're in my portfolio, they're keepers. But once a year, I think I've talked about this before, I go into the portfolio and Olivia, usually around tax time when we look at the portfolio, and we say, which properties perform the worst? And then we talk about which one gave us the biggest headaches. And a couple of times, the worst performer was also the biggest headaches. And then we talk about selling it. And, we sold a triplex on Glen, which I've talked about before a couple of years ago, because no matter what we did, it felt like we were bitten by a snake, and it would just never perform. So yeah, when a property doesn't work and it's full of headaches, sell it. There's no glory in keeping a loser. I was talking to Frank, or texting with Frank, old guy REI. Apparently he has a property in St. Louis, I think, that's given him a lot of trouble. And I'm like, Frank, sell the damn thing. If it's giving you that much trouble, there's no glory. Don't look at it as going backwards. Look at it as saving your sanity, right? Yes, you go from 6 to 5 or 8 to 6 or whatever the number is. But think about getting your sanity back, right? So there's just some properties that need to be sold for sure. Yeah. Hopefully that helps, Angel. You got it, Kat. No problem. Yeah, you have a better chance of me voting a new mayor of New York than me lending money to friends and family. Yep. Yeah, I will. I have no problem giving money, but I am not lending money. That's just, not my thing. What's it like answering late day questions in place of Dion? I think it's a lot of fun. Guys, the fact that Dion, Matt, these guys give back every week for hours on hours is just an amazing testament to the kind of quality people they are. And I'm lucky to know them. So I'm very happy to do this one-off in place of Dion, who's, I think he's still on an airplane, I think, heading to have a couple of months of fun in Thailand. Look forward to that story. But thank you for asking. It's a true honor to step in for a day, an evening, to do my best Dion impersonation, I guess. So thanks for asking. Yep. Would you be able to use a 50-year mortgage, or do you not qualify for it as it's only for those with 10 properties or less? I don't know yet. The crazy thing about the mortgage market is I do think you're right. It will. I think here's my guess. So first off, the 50-year mortgage does not exist yet. It's been proposed. I suspect if it does come out, it will only be for first-time home buyers. That is my strong suspicion. And to your point, I would not qualify. But here's the deal. I would bet you $100, $100, that if we assume for a minute that Fannie and Freddie and FHA and all these people suddenly start doing 50-year mortgages, the DSCR / Wall Street greed, money bags, whatever you want to call them, would generate their own 50-year mortgage within 6 months. So while I would never qualify as a first-time home buyer, clearly, I bet you there'll be a 50-year product available. Now, would I get one? I don't know. I'm in chill mode. I have a very low LTV, so I don't know that I would get one. But to your point, I don't think let me answer it this way. I hope I never qualify for a 50-year mortgage. I hope it's only for first-time home buyers. I hope they get smart and put a very tight box on it and help the people they're trying to help. Guys like me don't need any more help. We don't need any more help. What's the best way to pass your real estate on to your kids, tax and probate free, if there is a way? Again, I would talk to a tax professional and whatnot. You can create LLCs. You can add kids to that. You can do trusts, all of that. I don't pretend to be a lawyer or an estate planner, so I will not get myself in trouble there. But there are ways that you can do it. Talk to somebody who is paid to do that. I do not pretend to be a lawyer, so I don't want to get in trouble. Oh, look at that. Jack's writing a book. Yeah, writing a book's tough, so good luck. It was one of the hardest. Writing a book for me was harder than running a marathon. And running a marathon is hard, but writing a book is harder, for me anyway. Stronger dollar, but harder to acquire debt meant housing. If most assets are deflating, do you expect home prices in slow growth markets to follow? Oh, now I get your question, Angel. Well, first off, I don't think housing is going to deflate. As I've said for years, I think we're going to have a sideways market for 5 to 8 years. I think this is just like 1978 to 1981 and then 1982 to 1994. I think we're repeating history and nobody's smart enough to look at it, unlike us, because I had given you guys the 50-year spreadsheet. So I think housing is going to go sideways on a nominal level. If you adjust for inflation, you may have some real price drops, but 1 or 2%. But no, I think housing is very sticky. There's this thing, Angel, called price elasticity. And I think housing is the most price inelastic. And while other assets like crypto and stocks and what are very fungible and could have wild swings, that's not housing. Housing doesn't play at the same rate or speed or liquidity. So I do not see, like, Bitcoin's down, 26% or something in like 9 days or whatever it is. Some stocks are down 50% in a couple of weeks. That doesn't happen in real estate, and I don't expect it to happen. So I would challenge that idea. Again, as I've said, Angel, for years, I think it's sideways until 2030, probably 2029, something like that. How would you handle a partnership for buying rentals? Well, I would not do one, frankly. So let's be very clear. I have borrowed millions of dollars from friends and family. Millions, probably $8 million, $7.5, $8 million in total. However, it was always debt. I didn't want another partner. I have a partner. Her name's Olivia. I don't want anybody else. Life happens. Partnerships, friends, all that stuff changes. And real estate is something you hold for the long term. The last thing I want to do is be in a partnership for a decade and, somebody gets married and divorced and, all of that. And it doesn't, all of a sudden his drama impacts me. So I will take money as debt. I will not take money as equity. I don't want a partner. I want debt. And that means I grow slower. It just absolutely means I grow slower. And I'm okay with that, as should be evident. So I don't look at, some people out there look at partnership as the secret weapon. Not me. I would much rather grow slowly, be the tortoise in the game, than have a bunch of partners I have to keep up with and make sure nothing's going crazy. So, not a fan of partners. Do you think that there are recession in some states? One of them might be Nevada. Yeah, I mean, I think Mark Zandi said this morning, or maybe I read it over the weekend, 22 or 23 states are in a recession, and Nevada probably is one of them. Certainly, the casino part of Nevada is in a recession with travel down 9% or 11% or whatever it is, double digits. Yeah, I think there are plenty of states in a recession. Yeah. Yeah, I mean, it would be hard for me to argue we're not. There has to be some states in a recession. When you had a W-2, did you ever experience economic discrimination? An employer not giving out raises or promotion because they find out you have other income streams other than yours? Not necessarily income, but I was definitely passed over for promotions because there were some well, I mean that the one boss that I blew up with at the end, he was a jealous little turd. Yeah, he was evil, but I was uniquely talented at what I did. I was one person to take 3 products from 0 to 100 million. And I was very cocky as well. So some of that's on me. But yeah, when people know you have assets and you have options, they treat you differently for sure. I don't think there was anybody at my last job that thought I would be there in 5 years. In fact, I know they didn't. I told them all. I told them I was retiring at 50. I even told the VP of sales that I was retiring at 50. I thought I would make it to 50. Obviously, that ended at 45. But yeah, I guess I never thought about that. But yeah, there was definitely some envy. And well, I mean, yeah, when you don't need your job and you're living just fine, that does create a lot of jealousy and envy. So yes, thank you for the reminder of that terrible boss I had at the end. He was not a nice guy. Angel, you're very welcome. Appreciate all your support. Thank you for all you do. What's the best way to do a rental study and how long to really know your market and what rentals are going for in a whole city, Annapolis? Good study, or does it need to be? Again, for me, I want you to do, I only want you to do a rent study or a rent box or whatever you call it on your buy box. I think doing a rent study on Indianapolis is an interesting mental exercise if you're an economist, but should mean very little to you. What part of Indianapolis? What zip code? What asset type? That's what you need to know. And again, the more focused you get, the easier it is to do. Right? Here was my my buy box in 2001. 93703, single family homes, 3 or 4 bedrooms, 2-car garage, 2 bathrooms, single story, 1,500 to 2,000 square feet. Typically speaking, that produced a list of 20 to 25 active listings. And oh, by the way, it meant I didn't really have to look very hard for rents. It was 3 or 4 bedrooms. So that's the power of a buy box. Being a new investor saying, I'm going to invest in Indianapolis and I'm going to do a rent study in Indianapolis is a recipe to be, it's a recipe to be busy for months and go nowhere. Frankly, you could never complete that. It would never be enough. However, I don't know the zip codes in Indianapolis, but 1, 2, 3, 4, 5 duplexes, built after 1950 or whatever your buy box is, it should be wildly easy to get a rent box. So my suggestion is tighten up the criteria and get more focused. Oh, absolutely. I'm honored to be here with you guys. I don't normally do stuff in the evening, but it was nice to step in for Dion, and thank you for being here. Oh, in the beginning of your journey, how long did you wait before buying your next property? So we buy Norris Drive, and I think we bought Ferris or Terrace. I always forget which one was next. About 6 months. We let that sit for 6 months. before we bought the second one. We were not in a rush. I think being in a rush, going too fast, is a recipe for disaster. You don't know what you don't know. You don't know if you had your numbers right. So don't be in a rush. At least 6 months between your first and second, please. Same with your buy box. What's the best way to study your buy box for someone waiting to get into flips and rentals? Get your set of criteria like I just gave you, put it in realtor.com or Zillow or Redfin or all of them, and look at it every day. Track it every day. Find out what changed every day. Build a spreadsheet every day. Do the work. I'm 49, I own a property number 1, free and clear. Congrats. And I'm considering cash out refi to help fund 2, 3. Pulling out 25% LTV safe move in your opinion? Again, if I was in this, again, so what I'm going to take barefoot from this is you're in growth mode. What I would do is I would be comfortable going to 50% LTV, assuming it still cash flows, which I can't imagine it doesn't cash flow. But yeah, I would go to 50%, get that cash. But here's the deal. I don't, I might get what I might do actually is I might get an equity line. Why an equity line? Well, first off, an equity line gives you access to it, but you don't have to use it and you don't pay for it. So I would get an equity line right now, 50%. Then I would start doing the work, blah, blah, blah. 3 months go by, 4 months go by, find a deal, use the equity line, buy the property. Then at that point, when the equity line is used, because again, equity line probably has a higher rate than a mortgage, you can decide whether to pay off the equity line or just do a refinance with that first property into long-term financing. That's what I would probably do. But I wouldn't go above 50%. I would be conservative. Yeah, join school. Yes, please join school. What debt to equity ratio or your portfolio do you recommend when you are 5 years away from retirement? 9 single family homes. Started the Ramsey way. So wow, 20%. Congratulations. So this is a very know thyself moment. I don't know that there is a right answer. You got to be comfortable. So the answer here for me is the sleep at night test. At what number do you sleep well at night? If the answer is 20% like you're today, congrats. I suspect, again, just a wild guess, that most people would sleep really well at 50%. I think it gets a little dicey at 75. So again, don't know your situation, but I've met very, very few people who aren't secure at 50% LTV. So again, your mileage may vary, but that's what I've seen historically. Do you know any broker investors? Do you think being a broker can be good side hustle for a full-time employee? Was thinking of trying it. I don't know. I think getting your license is overrated. If you read my book, One Rental at a Time, one of the first things I did after retiring was get my real estate license. So I did the work, took the exam, passed it, had my license, and never used it other than my own deals. I think getting your license for creative real estate investors is actually downside. Why did I get my license? I was convinced that there was secret information in the MLS. I was convinced my agents were not telling me everything. And what did I find out once I got MLS access? There's no special sauce. There is this one field called agent comments that rarely used, sometimes had information, but almost never. So I got my license, wasted, 100 hours studying, hundreds of dollars, if not $1,000, taking the test and education, all to find out that there was nothing special. And then guess what? For 2 years, I was a licensed agent, which means in any transaction, I was assumed to be the expert. No, thank you. I don't want that liability. So I was happy not to renew and lose my license at the end of 2 years. So I think there's, again, for a creative real estate investor, there is only downside to getting licensed. Now, if you're looking to create a side hustle that might turn into your main hustle, like there's nothing wrong with being an agent. There's probably a dozen agents on this call right now. So again, you could, if that's what you want to do and you want to build up your Rolodex and build a client list and all of that, then, go nuts. But don't think there's some magic sauce in there as I did. So yeah. Oh, look at PTO Life with the $10. Thanks, Mike, for making the best YouTube channel and community. Orat changed our lives, and we couldn't have done it without you. Your guests and wisdom strive for everyone to be a better investor. You guys are amazing. We will see you in Vegas. If you're in school, their presentation from year number 2 is already there, so go check it out. They're wonderful, wonderful, wonderful people. Thank you for that. You're very nice. All right. Hopefully I got that one right. Okay, good. I've built good equity, paid off. One sec, guys. Hold on. I had a little room heater on and it got hot, so I turned it off. Let's see. Angel. I built good equity, paid off 280K duplex. Nice. Okay. So again, it doesn't. So again, Angel, for me, I think what I would do is I would get an equity line. I would get an equity line on the free and clear duplex. And I would just keep it. It's kind of like a loaded gun that you keep just in case. And if you find a deal that warrants pulling that trigger, then pull that trigger. But you don't have to. That's the beauty of an equity line, is you don't pay on it until you found an amazing deal. And as far as being an investor, I'm not really tied to rates, right? If I have to do a cash out refi, because again, a lot of my properties I'll have debt on forever, right? Just take out equity and move on. But again, it's not my main home. Like if I had a 2% mortgage on my home, I would do everything I can to keep that. But these are all investment properties. Guys, this is Monopoly. You're playing Monopoly in real life. Don't let some misguided tied to an interest rate prevent you from doing an amazing deal. Now, to be clear, I'm not telling you to be foolish. I'm not telling you to do a bad deal. I'm just telling you if the deal warrants pulling the trigger, pull the trigger. And again, I don't think there's anything wrong in getting an equity line that you don't use. If you have a 200K equity line and you don't use it, no big deal. It's okay. If there's a recession next year, do you think the price of houses will go down? Think like a bear, not a doomer. There's a lot of pain coming, which means a lot of opportunity for investors. Again, I would argue we're in a recession. I mean, but who knows? I think there's going to be plenty of pain next year. I don't know how there couldn't be. But I would not expect real estate to go down like the doomers are calling for. I don't see a 9% drop. I mean, there's plenty of doomers and crash bros and crash sisters that have been telling you a 9% crash is coming each and every year. It's just wild to think about. Housing is not set up like the GFC. We have fixed shelter costs. We don't have variable interest rates. We don't have 50% ARMs. It's just a totally different setup. And, a recession doesn't really change that. Yes, there'll be some short sales. Yes, there'll be some foreclosures. But given the setup, I don't see it happening, at least not at the national level. Could we have a real estate crash in a market? Absolutely. Look at Austin, Texas. Look at Fort Myers, Florida. There's no question that there could be some markets that go down 10% next year. But I would argue there's just as much a chance that there's some markets go up 10% next year. So if you want to talk national home prices, just like this year, just like the year before, next year will be the same, flat. Guys, go look at the 50-year spreadsheet. We have been here before. I know the doomers got you all convinced the next coming of the GFC is here. They're idiots and morons. They own nothing. Why would you want to follow someone who owns nothing? It's just crazy to me. So I don't see an impending doom. That's just one guy's opinion. I could be wrong. I'm wrong all the time. Thanks, Alex. Yeah, 500 school members this morning. 502 was the peak, I think, that I saw. I think any investment that produces less than $200 a month cash flow is crazy, too skinny. What do you want your legacy to be? The one thing I got right in life is my very first video on YouTube, and I've done 18,000 videos, so it's 18,000 videos ago. I actually said what I want my legacy to be, and it hasn't changed to this day. I want to create a legacy that outlives me, my physical body, by 50 years. What does that mean? I want people saying the name Michael Zuber or One Rental at a Time 50 years after I'm dead. I think that would be an amazing legacy. In fact, that is the only legacy I'm playing for. Why do I show up 5 days a week? Why do I create content for 3 hours a day? Why do I run and monitor a school group? Why do I do live events? Because I'm playing a different game. I get told by all of these gurus, Zuber, do this, do that. You got to sell a $10,000 mentorship. You got to do a $20,000 this or that. I'm like, guys, you're not paying attention. That means nothing to me. I have no physical want or desire that I can't already match several times over. So, I just had a call today, actually yesterday, and he's like, why aren't you doing a $9,990 mentorship, yearly mentorship thing? I'm like, what are you talking? You have no idea who I am. That's not it. That's not it. No, I would rather do a $20 school program and give everything away. So again, my legacy is someone speaking kindly of my name or one rental at a time 50 years after I'm gone. That's the legacy I'm playing for, and I play for it every day, and I play it seriously. Any thoughts on buying investment properties overseas? Not really. I've toyed with buying a property in Bali, frankly. That's just more a toy. No, nothing of serious. If I'll say this, I'll give this one caveat. Olivia and I have talked for years about having condos in different parts of the world, like, one in Australia, one in Japan, one in, I don't know, Chile, or just, I'm picking random countries. But if we ever made a move on that, we would probably set them up where they would be rented when we're not there. But that would be the only reason that I could think of that we would do that. Oh, what's your minimum days on market before insulting offers? This is a great question. So what I would do is I would figure the average days on market in your market. And let's say for a moment it's 28 days. What I would do is multiply that by 1.5. So what would that be? 28 turns into 42 days. So in that example, 42 days is where I would write disrespectful offers. So 1.5 times whatever the average days on market is. If average days are 20, that means 30 days. If average days are 30 days, that means 45 days. Hopefully that helps, Matt. I've been watching your video since 2021. Thank you very much. I now own 10 rental properties in 4 states. Wow, you're crushing it. Congratulations. Oh, would Himlane ease the first 5 years of suck? Probably. Communication, audit trail, tenant review. Yeah, they would have definitely helped. Yes. Oh, you're buying properties in the UAE. Oh, wow. Reach out to me. I'd love to hear more about that. That sounds like fun. I've never been to the UAE. It's one part of the world I haven't been to. Can you write off mortgage payment 27 and a half years in a sub 2 deal if I still use so? I don't know, Jack. I would ask Bob Langworthy, who's in school. He's an accountant. I would ask him. I don't know. I'm not going to pretend to be an accountant. I don't want to get in trouble. Oh, where do we go? Oh, we're down here. At your growth stage, how far ahead were you aiming, strategizing, assuming daily habits, actions, oriented goals? Were you just thinking on the next one or looking out 3 or 4 moves? Chris, this is a character trait which depending on how you look at it is either a strength or a weakness. I have never, ever, ever, ever been able to look past just the next deal, the next video, the next this, the next that. I am so comfortable, Chris, living in the mud, in the dirt, that I don't look up. I don't look ahead. I just do. I just work. I am comfortable and frankly happy grinding. Now, I say that knowing who I am. And I've really admitted many times, I wish I had that gene, that kind of look into the future and look at the big shiny thing on the hill. I just don't have it, man. I don't, it's probably a weakness, right? You hear people talk about, aim for the stars and you end up at the moon or whatever that is. Dude, I just work. My goal was the next property. My goal was the next offer. My goal was the next daily look at the buy box. Work, 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 work. It obviously worked out well, but yeah, dude, I do wish like Adrian Hernandez, who I talked to, Ty, Omar, these guys, they like see the future in Technicolor. And like, I'm jealous. I don't have that. I just don't have that. Yep. Bill O'Connell. Yeah. 18,000 videos. Yep. Pretty crazy, huh? Check out clips from Nick Rochfort, Scuffer Realtor. You guys have the same message, but a little different delivery. Oh, I'll check them out. Thanks. I will check out Nick. Appreciate that. Is it true the Fed had a secret meeting today? No. If you believe the headlines, it was Friday. Friday, they didn't have a secret meeting. They had an emergency meeting. Friday was an emergency meeting where the Fed, New York Fed specifically, the New York Fed got together with the big banks to talk about the money markets. So I believe that's what you're referring to. It was not secret. It was an emergency, and it wasn't today. It was Friday. If it did happen today, then I haven't heard about it yet. You never know, I guess. I recall not long ago you were trying to do an ADU. Did you ever get that completed, or was the process taking too long? Well, unfortunately, I tried to do an ADU in California, and I did multiple properties in my market of Fresno. And on one property, the first property, turned out to be inside a postage stamp of Fresno that's called the Historic District, which meant it was going to be next to impossible, but nobody told me. So I wasted 6 months and about $5,000, maybe $8,000 on architecture. So that was mistake number one. I assumed extreme ownership, so I took that L because I knew it. I knew this house was in the historic district. It was frankly why I wanted to do it, because it had this huge lot. I thought it could make the value explode. So shame on me. Then I went to do another one in a different part of town, not historic district, approved for ADUs already. And after getting the plans, the city wanted $50,000, $50,000 to go out and look at the lot and not even guarantee approval. At which point I told them to F off. And if you guys don't want new housing, I'm not going to build it. So yeah, I am not a fan of building ADUs in California, at least Fresno, California. I know there's some people killing it in San Diego. Not in Fresno, man. Horrible experience. What is your favorite part of the cash flow game? Mine, the rest race when you have momentum. I think the favorite part of the cash flow game, the board game, which I have right over there on the shelf, is watching other people get it. Right, I've played that game well over 100 times, and I'm happy to play with anybody because I think it does unlock something with people. And for me, it's always fun watching people go, aha, I get it, blah, blah, blah. So yeah, that's probably the funnest part of the cash flow game for me, is watching other people's light bulbs go on. All right. I think I had all the questions. You guys got some more questions? I'm here for you. I told Dion I would go as long as 2 hours, but that doesn't mean we have to go 2 hours. Let's see if Matt ever pinged me. Nope. Non-real estate, Bitcoin, goodbye long 5 years. So I can, again, I'm not a Bitcoin maxi or any of that. But I think if you have a decent net worth, and you could define whatever decent is to you, I think all of us should have 1% of our portfolio in Bitcoin. And I mean Bitcoin specifically. I don't mean crypto. I mean Bitcoin. Again, why 1%? Because again, if it goes to zero, which I'm not saying it will, I'm just saying if it does, it doesn't hurt you. And if it goes to $1 million, congratulations, what would that be? 10x your investment. So yeah, I think everyone, once they have a decent net worth, needs a 1% exposure to Bitcoin. And to be clear, I'm talking my book. I did this in 2018. 2018, have a decent net worth. I chiseled off 1% of our portfolio and put it in Bitcoin, Ethereum, and a couple of other shit coins that went to zero. But thankfully, the 90% in Bitcoin and Ethereum have done quite well. And, it's still roughly 1% of my portfolio. And again, I don't sell. I don't sell. I just keep. As a previous sales guy, need advice. Currently, a chemical role farmer. Yep. Manager wants me to transition to hunter, small company with no guidance. What's path for a great hunter? Oh, farmer versus hunter. So hunter, you need to have name recognition, either company or yours. You need to have proof of concepts that are very quick and meaningful. If you have those two things, being a hunter is amazing because you kind of make your own rules. You got all this open territory, open accounts. You can go get partners to cross sell and sell on your behalf. But again, you need name recognition and a ROI or proof of concept, whatever it is in your field, that is undeniable. And if you have those things, hunters kill it, just crush. Some people have a goal, make 20K a month or so many doors. So what is your goal? And is it cash flow? Why not pay off some of your properties and have less properties and more cash flow? So when I was in growth mode, we had debt on everything. When we flipped to chill mode, we absolutely paid off houses. I call it my oh shit pile of houses. Just in case the world goes to hell, I have, a decent amount of properties owned free and clear. But that's because I'm in chill mode. So absolutely. When I'm in chill mode, for sure. Yeah, absolutely. Yeah. Oh, absolutely. Thank you for your service. Yeah, Mom, I'm only sitting here today talking to you because of the military. My mom was in the Navy, Dad was a Marine. So absolutely, veterans are everything. Yeah, like one of the things I've often thought about doing is creating a, I don't know, either creating or supporting charities for veterans and animals. Right, those are important things to me. Yep. Why do you think mortgage rates are stubbornly high? I think it's because the debt market doesn't believe that we're going to get our fiscal house in order. We have $38 trillion in debt and growing $1 trillion a year. We're all lucky that the rates aren't higher. And let's be serious. We got to bend the curve. That's what I thought this Trump administration was trying to do, but maybe not, was to bend the curve. And if we bend the curve, rates will fall. Rates will crash if we can show that we're getting our fiscal house in order. But why are rates stubbornly high? Because we're not getting our fiscal house in order, and it's only getting worse. That's why. So we should all be thankful they're not higher, in my opinion. Love all the content. By the way, your book is awesome. Thank you very much. I appreciate that. Yeah. Yes, we will. I'll let Dion know. Thank you for that. Let him know next week I did a good job. That would be nice. New investor here, started last year, got four houses. Good for you, rocking and rolling. Different states, as you know, looking to invest more. Do you think we see the next real estate boom? Do you think we will see the next real estate boom in the next 7 years? I don't know. Let's define boom first, right? Boom to me would be a year where home prices go up, say 8% or more. Let's just pick a number, 10%. Let's say 8. 8 years. What would that be? 2033? Eh, maybe. Maybe. Yeah, I think we're going to be flat for the next couple of years. We've already been flat for 3 years, so a couple more. Yeah, it's possible. It's possible. We need wages to go up, though, right? We need affordability to get better first. What's up, buddy? Good to catch you live. Yes, FD, how you doing? Hope all is well with you and the family. Thanks for checking me out. Is throwing all my money into Bitcoin smart? Well, I think I've already answered that question. I would put 1%. If you want to go nuts, go ahead and put 2%. All right, I think I got all the questions again. Give you a few moments to type in some more. Just scrolling back up to see what's what. All right, guys. Ryan, drive safe. All right, what do we got? I found that with inflation over the past 5 years, the vacant land rental property mix has worked out well. Have you experimented with supplementing vacant land in your strategy? So we have. So when did we do that? We bought a bunch of lots, what you would call city infill lots, by a bunch, 6 to 8, something like that. What year was that? I want to say that was 2015, 16. And, the ultimate plan was to build housing on it. We were still working at the time, and we realized that it would take a lot of work. And then we sold the lots probably 6 months later, 7 months later, made a little bit of money. But it was, it's actually a strategy I should probably look at now that I'm not working. Right, we have somebody in the school community, somebody who's been on my channel a lot, Brandon, who's doing that infill lots, I think in Texas. So I know it's a strategy that can work, absolutely. And I'm actually seeing service labor get cheaper, so this might be a good time to try that, actually. Yeah, it might be a good time to try that. Thanks for 500 on school. I appreciate that. All right, I banned my first person of the show. Somebody was being a dick, so I just blocked him. So that was fun. Did you find this live fun? Open to doing it again, or just think about it? We'll see mode. I think it's a lot of fun. For me, I don't do a lot of things in the evenings, frankly, because I have an amazing life, and my evenings are for Olivia, frankly, Olivia and I. If you guys don't know, I'm a morning person and she's not. So, I'm able to create content and do my own things until about 11 o'clock when she starts stirring around. And yeah, from 11 o'clock on, typically it's her and I, which is what I love to do. So kudos to me. But this 1 week, I'm flying alone in Vegas, so I have time. That's why I'm doing another live tomorrow in school at 4. But I love these. I think they're a lot of fun. But I love my time with Olivia more. So kind of the answer there. Hey Kim, how are you? What's the best call of 2025 and your worst call of 20? Oh, I think my best call, and it might not even be my best call for 25. It might be my best call ever, was that August of 25 will be the transaction bottom. That is looking really good right now. That is looking really good right now. That August 25 will be the bottom, and I will have nailed it to the month. So I think that's my best call. I think my worst call, I think I've done this 2 years in a row, is I called a recession, and it didn't happen. And it didn't happen for probably reasons that I should have understood, Kim, like government spending and all of that, AI spending and all of that. I would think that was my worst call and my best call. I appreciate that question. That made me think. Thank you. Hope all is well. On a home inspection 1 to 4, what are your red flags, yellow flags? For me, foundations. Foundations are a big deal. Not that it's a big thing, but it can be a big thing, especially in some parts of the country. Foundations is a big thing. Electrical is a big thing. Knob and tube, which still happens. Lead paint could be a problem. Roof's not a big deal. Mechanical's not a big deal. Unpermitted extensions. Like I can't tell you how many times a porch became a family room or something. So anything that's unpermitted can be a red flag. Scoping the sewer line, especially in older houses, you get to see cracks and all of that. I've had plenty of sewer lines pop. That's what I come up with off the top of my head. Oh, Josh, congratulations, new STR. Hopefully I sent you a card. I don't remember. Ben, you're very welcome. What's the most memorable, impactful Three Amigos conversations you've had? Oh, that's a good question. I remember talking to Dion the day he decided to quit. That was cool. Right, he was still working, so he talked to us. Right, we recorded a show, and then he asked us to hang back, and he told us that in 10 minutes he was quitting. That was a good conversation. When I talked to Matt after he found out his baby had cancer, a very bad form of cancer with very low odds, that was an impactful conversation. She thankfully turned out great, and she won. She's free and clear, so she's great. But that was really tough. Yeah, so one happy and one sad conversation. We all know you respect and love one another, but is there something you think Dion and Matt is crazy in their position on? Do I think they're no? I don't think so. Crazy. I've told this. I mean, you can go back and I don't remember what video it was. It was 3 or 4 years ago. I told Dion that he should go get an equity line on his free and clear house when rates were under 4. And I think he would admit that was a mistake that he didn't do. So I think that was stubborn and an opportunity missed. Now, so that's Dion. Matt. I think Matt is just an amazing person who will stand up and fight for you if you're one of his friends. And, even without you asking, right? Which is just shows you the kind of quality person he is. So I never had anybody in my corner do that. So I've watched him take on battles that he frankly didn't need to, but he was happy and welcome to do that. And that just shows you the kind of friend that he is, that even without asking and really without even recognition, he'll go to war for you if you're a friend. So I appreciate that about him. Thank you. I appreciate that, David. I hope so. Yes, definitely, Kim, a people business. And I would hope for most of you, your most impactful conversations aren't real estate. Real estate is a means. It's an amazing means. It's full of wins and losses and struggles and celebrations. But I hope you get to really know people. And, the biggest thing I would tell you is to figure out your why. Right? Someone asked me, forgive me, I don't know who it was, but asked me what's my legacy. That's my only why. That's my only why. Is to try to be spoken of, my name, Michael Zuber, or One Rental at a Time 50 years after I'm dead and gone. And I just hope you all find your why. I hope you find your why of your friends. Because if you know the why of your friends, you can help them. They can help you. And it's just it's life gets simpler when you know your why. And I say this as a 53-year-old guy who didn't have a why until he was probably 45. I was too busy grinding and working and, being stuck in the mud. Local insurance underwriter said apartment rates are going up. Any input? Thanks. I think insurance is going up on everything. So no real input on that. Sorry. Sounds right. I mean, I don't know what your insurance rates are. I think my insurance is up 40% over the last 2 years, 2.5 years, something like that. Yeah, insurance is no joke recently. All right. Give you guys a couple more minutes because, again, I'm willing to go all the way to 6 o'clock. But if we're done, we're done. Let's see. Let's do a quick countdown. 10, 9, and I'm waiting to see if any more questions come in. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. I guess we're done. All right. Anybody busy typing? All right, folks. Thank you for being here. Hopefully, we did Dion a solid, and let him know next week. And I will be wishing you all well. Hopefully, you get inside school. Hopefully, we'll see you in Vegas. Take care of yourself. Have fun. Go get rich in 2026. Peace.